This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil rose more than 1% on Monday as attacks by the Houthis on ships in the Red Sea raised concerns of oil supply disruptions, although ample supply and skepticism around Russia's plan to cut exports in December limited gains. A Norwegian-owned vessel was attacked in the Red Sea on Monday, and oil major BP said it has temporarily paused all transits through the Red Sea. Other shipping firms said over the weekend that they would avoid the route. Brent crude futures were up $1.40, or 1.8%, to $77.95 a barrel by 13:07 GMT, while U.S. West Texas Intermediate crude rose 80 cents, or 1.1%, to $72.23.
Turkey and Turkish companies have saved around $2 billion on energy bills in 2023 by raising imports of discounted Russian oil and refined products, Reuters' calculation based on LSEG data and traders' estimates showed, and Ankara wants to buy more from its neighbor despite Western sanctions. Turkey became the biggest importer of Russian energy in the Western Hemisphere after Russia's invasion of Ukraine triggered European countries to halt most imports of Russian oil and gas. Russian Urals crude oil shipments to Turkey rose to an all-time high of 400,000 barrels per day, BPD, in November 2023, accounting for some 14% of Russia's overall seaborne oil exports last month, LSEG data and Reuters calculations showed.
Moving on to the top news in the energy sector.
Britain will implement a new carbon import levy on some products from 2027 to help to protect businesses against cheaper imports from countries with less strict climate policies, the government said on Monday. The planned Carbon Border Adjustment Mechanism, CBAM, will apply to carbon-intensive products in the iron, steel, aluminium, fertilizer, hydrogen, ceramics, glass and cement sectors. The charge applied will depend on the amount of carbon emitted in the production of the imported good and any gap between the carbon price applied in the country of origin and the carbon price faced by UK producers.
Oil is flooding out of Texas in the final weeks of 2023, as traders find outlets abroad for record U.S. production and dodge a hefty year-end tax bill on their inventories. U.S. crude exports, nearly all of which leave from the U.S. Gulf Coast, averaged about 4 million barrels per day, BPD, so far this year, according to U.S. government data, about 500,000 more than last year's record as oil production climbed to 13.2 million barrels per day. U.S. West Texas Intermediate crude's wider discount to the global benchmark Brent, currently at about $4.50 per barrel, is making U.S. oil more attractive to European and Asian refiners. Next, we have the top news in metal markets. The London Metal Exchange, LME, is planning to launch new metals contracts using prices from the Shanghai Futures Exchange, ShFE, three industry sources familiar with the matter said, further increasing China's influence on global metals markets. Collaboration between the LME and ShFE was mentioned briefly by the 146-year-old LME's chief executive Matthew Chamberlain in October at the annual LME Week dinner, without any detail. 2 years ago, the idea of China allowing an overseas exchange to use domestic prices would have been met with reluctance, but since then there has been a sea change in strategic direction at Chinese exchanges, the sources said.
Australia has opened a door to government funding for copper and nickel projects, putting them on a list of materials deemed essential to the global energy transition but which have not yet faced supply chain disruptions. Strategic Materials will be able to access some $40 billion in government support from agencies including Export Finance Australia, the Northern Australia Infrastructure Facility, the Clean Energy Finance Corporation, the Value Adding and Resources Stream as well as the National Reconstruction Fund. The new Strategic Materials list is separate from the country's critical minerals list and will include copper, nickel, aluminium, phosphorus, tin, and zinc, all of which have well-established industries, global market depth, price transparency, and stable supply chains.
We will now look at the top news in the agricultural sector.
China logged record corn imports of 3.59 million metric tons in November, customs data showed on Monday, adding to a record domestic crop and further pressuring prices in the world's number 2 grower. November corn imports surged 384% from a year ago, coinciding with a record domestic corn production of 288.84 million tons this year, following a government push to raise the output of the staple grains for food security purposes. The November import volumes were higher than expected, mainly because of quick loading from Brazil and some from Ukraine, said Rosa Wang, an analyst at Shanghai-based agro consultancy.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.